Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, January 12th, 2023. I'm showing you the premium report. What I was really explaining is what I was doing with the remaining shares of the long trade from the 38.25 on the S&P. And I'd said I'm not against closing the trade out here, but there's resistance at 40.10. It's major resistance. I believe sellers will be waiting, and I will move to cash anywhere near the 4,000 level. It was a great trade, but patience was needed, and it was. So I mean, obviously, our goal that we try to go with every with each trade is 100 points on the S&P 500. And if we take a look at this right here, our entry was 38.25, so right in just say this area here. And we've gone, over 100 points. And now I'm cash because with the conversation that I had with Woody, where he's looking for some type of short-term top to come in. We already know when the low is in, and I think there's going to be a decent little pullback anywhere from 100 to 200 points. That's going to fit our criteria. And, here's some of the reasons why. We have bearish divergences on the 15-minute chart. We have bearish divergences on the 60-minute chart. We're trying to roll over. And if we take a look at our major resistance line here, you can see that's pretty much exactly where we went to. And on top of that, you can see which one is this? This is the 200-day moving average. So this was my area that I was looking at as far as upside targets. And then if the bulls can get through it, they have the 40.13 as the next resistance. But then we have resistance up here at the 40.76. So you have two different moving average resistance. You have price resistance, and we have some bearish divergences on the 60-minute charts. So to me, it makes it that we're going to get some type of little nail biter. I'm not, I'm cash right now. So if we head up tomorrow, I'm fine with that. If we come down, I'll probably wait for a bounce back up and test the highs again and short that. But just guessing exactly where this is. We like I said, we have the resistance at the 40.13. If the bulls can get above it, we have some resistance right up at the 40.50. So these are the levels you want to look. And really for the bears, the first thing they're going to have to do is get price below the 39.50 level. If they do that, really the more important level is going to, or the zone really to look at, is going to be the 39.12 down to the 38.80. If the Bears can get through that, that's kind of where I believe that you'll see acceleration pick back up. Now, again, I've been kind of lucky with these because I'm forming them way before that it ever happened. But I've been actually it's been pretty remarkable how they've been playing out. And what I'm showing you is we get a quick drop down to the 38.75 level, pop back up, and what that will be is a head and shoulders pattern, and it's actually a fairly big one, being that about 100 and almost about 100 points. So once we break through the neckline, if this plays out again, this is not something that's guaranteed because we haven't even come down and made the right shoulder. This is just foreseeing what possibly could play out. And if it does, go here, we're looking at 39.98 to let's just say it's 120 points, but it would be 120 points from where the neckline breaks. So you're looking 37.50 would actually be the downside target if this plays out. Now, again, I don't know if it's going to. I have, we just want to keep an eye on it right now. But we have the bearish divergences, and as I spoke about with Woody, just kind of trying to roadmap what he's seeing, where there's some short-term top that should be coming within the coming hours, days, maybe week, and we know when to expect a downside low, and from there that's going to be a swing trade to the upside. But right now, I think with the all the sell signals in place and us looking for some type of topping pattern up here, we're going to get anywhere from 100 to a 200 point drop. And then from there again we'll move to cash, and then look to get long. And really, if any, just to go over how this works, I showed option trades, but the vehicles that I use is the SSO, and which is the ETF on the upside two times. So if the S&P is up one, this will be up 2%. And on the downside, it would be SDS. So basically, when the S&P goes down, the SDS goes up. So you can just use these ETFs to trade. But right now, from where we were, where we got long, I'm just going to go here and say it's at 43.52. We're at 4,800. So that's a 10% gain in less than a month. And once we start getting the let's just say that the bulls are worn out, we're simply going to switch over to the SDS. And this, as you can see, when the S&P is going down, this is going up. And they really, they move at anywhere from 10 to 20% clips. So you can see why you make, if you make two trades a month or even one trade a month, and you're going into year's end. I mean, obviously we'll have a couple drawdowns here and there. We're not going to be right 100%, but for the most part, we're looking at possibly doubling your portfolio if things keep going the way they are. So just to kind of recap things here. I am anticipating that there's going to be some type of top, whether it's here or we got to head up to the 40.34, 40.13 level. I'm gonna let the market tell me that. But that's going to be where we're looking to start build our short position as we're cash right here. Which we had a little bit, if we're looking at the 38.50 level, which this is pretty much right where we averaged in our long position. You can see there really was not a whole lot of pain. It was just more frustrating when you saw big moves come right back down again. But eventually, what we were forecasting, it played out exactly as it is. So now we move to cash and we start building a short position for that next move. And once we get into the low date, then we're going to be start looking for the long side trade. So really, the main thing, like I said, for the bears, they need to get it through to 39.50 before until they get through that support. The bulls are going to continue to try to charge. The more important support, 39.11, and then down at this 38.75. If they lose that, that's where I believe we'll come down and test the 3,700 really quickly. So with that, have a great night. And if you guys are not members, take advantage of the special offers we have. I know our new marketing team that is kicking things off. He wants me to remove that. So I'm not sure when our new site's going to be up and running, but he wants it to be where there is no discount like that. So take advantage of them. You're seeing firsthand what these trades are doing. And again, if you just trade the SSO or the SDS and that's it. It's fairly simple. You start using the S&P 500 as your guide to buy this, and so basically, when the S&P was down at the 38.25, you're just buying this, and this is your move up. I'm sorry, if the S&P was moving down, SDS moves up, and then the SSO is the one that moves up with the market here. So you can see that how you can make 10-15% trades on each one of them, even if it happens to be once a month. That's making 10% a month is something what money managers would dream to have. So have a great night, and I will talk to you guys in the morning.